Good afternoon, everybody. Welcome back to the Opportunistic Trader. It's noon on December 3rd, and we're joined by now Tracy Shuchart. Tracy is an independent trader up in Canada. She's been providing a lot of great information in the chat for us. How's it going this morning, Tracy?
Good. How are you?
Good, good. A lot to talk about. G20 has now concluded, and we gapped significantly higher, traded up to 28.14. Following last week, we were up about 4.5% in the equity market. What are your thoughts on what you've heard so far?
I still think, as far as the whole trade deal is concerned, I still consider it kind of a kick the can, like we get 90 days. And really, I think those 90 days were really to China's advantage so that they could restock on soybeans. Nothing's, I sent out a tweet, I'll put it on the chat, kind of what China released as, what their statement was compared to what the United States statement was. And it was a big variance. So,
Yeah.
I'm like Larry, I'm a little bit skeptical on this. It doesn't sound like anything's really done. We just kind of, kick the can. The markets, of course, got a boost from it. But that remains to be seen. We had a lot of headlines out this morning about this trade deal, and so far, the market hasn't really reacted. In fact, we're down every time they, Kudlow says something, or the headlines come up. Market hasn't really moved the market up to the upside. So, a lot of it could be, kind of buy the rumor, sell the news kind of thing as well.
So what about purely looking at things on a technical basis? I have a short-term chart up of S&P and crude, but sticking with equities for the moment, what do the technicals look like on this gap? How do we typically react on a gap in this sort of price action?
I would think that, as soon as I would think that we would bounce some on that gap for certain. We have other gaps below, but, generally, if we're going to have this big, Christmas rally that everybody expects, then, at least in the short term, I think that you could probably, take a long at the gap fill, but, I would watch it again because I think that, it might be buy the rumor, sell the news type of scenario. But generally on gap fills, we see a bounce anyway. So for an intraday trade, I think it would be a good opportunity for a trade at least.
Gotcha. Now, what about if we start to fail? And, I know you were talking about looking at some 65 levels or something more in the mid 60s. What does that signal if we start to fail?
60, if we start to fail below the gap at 65, that was the gap that we have open from the futures open last night.
Mm-hmm.
So, if we started to fail 65, then, I have plenty of gaps below that. And, considering, we have a lot of things that I would say aren't exactly bullish coming up. We have a rate hike coming up. We have, more SOMA. The market in general, the underlying fundamentals of the market are still not fantastic. So, but that said, we're looking for a Christmas rally, or everybody's looking for a Christmas rally. So again, waiting to see what happens at that 65 area.
What about, so potentially though, 65 is an area you think you could get long potentially because it filled the gap, technically speaking. Where would you put a stop potentially if you were to get long filled on that 65 limit?
I would not have I would have maybe, 10, 15 point stop on that.
So something like a 55 or 52 stop, and you'd be looking for possibly getting back up to 2800 or 2790-ish range?
Yeah, I have daily right now at like 2780.
Okay.
On a daily chart on.
Yes, that's still good risk reward there. What about crude oil? Right now, unfortunately or fortunately, it looks similar sort of gap, and we're fading a bit. The recent price
looks
action.
Like yes, right now.
Right. So what do you think?
Gap up. Technically, we went up. We hit monthly VWAP, and we're starting to come down that 53.86 area. Again, I'd be looking for a gap fill on this as well. right now, literally 52.08. I posted a chart on I posted my daily levels on the chat in the commodity section. So if you look at 52.08, right now we're kind of at a support resistance level. So for an intraday trade, you could take that for, I would take 52.08, like looking at my levels, I would take 52.08, try to get like 52.40 on that. Would be an intraday scalp kind of trade.
Okay. What about
kind of how my levels work?
What about the dollar? Where are we here? We're kind of in no man's land. The low in the year is roughly about 112. We're right now at 113.60, and we're up 40 pips on the day, but just lackluster is one way of saying it. Is there anything that sticks out at you in FX?
USD. I mean, I'm still looking at USD. I have support at 96.68. So far, last week, what we did, we came down, was the first time that we've been trying to break this area for a long time. So we keep pushing up and keeps getting pushed back down. Last week was the first week, if you look on the weekly and the daily, we got up above it and it held as support. And so far, it's still holding as support today. So, I'm still bullish the dollar.
You're still bullish. Yeah, looks reasonable, and it's just been very slow moving past few months. So we'll keep an eye on that one. Anything else popping out at you as you scan the entire market space?
I don't look at a ton. I mean, I think gold is interesting. I was surprised that it was up so much, but it was buy everything day. But I don't really trade it.
Yeah, I know you mainly got four indexes, or you have four things: crude, S&P, dollar, and gold, right?
And euro, and yeah. So I mean, I don't really trade a lot of things. I mean, I think there's probably some good grains trades to be had in this. So I'm kind of watching actually soybeans as kind of a proxy for the broader markets, believe it or not.
Yeah, I saw that, and I agree. And it doesn't look like it's up a whole lot. This is, if it's such a great thing, it's only up 1.5%, and similar. Just going over a few different things. Yields now are down on the day, which is interesting, and Russell is down on the day. So,
Yeah, I mean, it doesn't look like. I mean, so far it doesn't look like except for that initial push up, and soybeans opened up like a buck up too. But I mean, so far it doesn't look like this market's 100% buying this is, then NLBL. And to be honest, if this trade deal is the only thing keeping this, market up, I mean, keeping this market, this market has a whole bunch of other problems, in other words, besides just this trade deal. So, and perhaps the markets are realizing that as well.
Yeah, absolutely. And then technically, though, not just looking at intraday here, I know we've been looking at intraday and things like that. How does the chart look when you take a look at S&P, given the volatility over the last 5 or 6 weeks, but, 2 weeks ago was a big down week. Last week was a big up week. We start this week with a gap. How does the longer term chart look, and where's the room, where's the work need to be done there?
I mean, I think that if you look on, daily chart. If you look on the daily chart, I mean, we're still at that, like 28.20 is still holding as resistance. Now, it would be possible to have that gap fill, say at 27.65 area, and then, if we break 28.20, then, I mean, the risk is the next level that I really have up is, over 2,900. Which would be that next HVN up. So there's your, possible upside, say, for a Christmas rally. Otherwise, we fail and we go, we go back down. And that area I would be looking at like 26.97 because we have gaps down there.
Yeah, interesting.
Just on bigger, like longer term trades. So yeah, you're either above 28.20, possible back to 2,900, or we're below this 27.65 2765 area, and the RIT is down to 2697, if that makes sense.
Okay, so we're pretty interesting levels, and actually both ends of today's wide range. Really, high today is 2814, low is 2773, closed yesterday around the 2760-ish level. So have some work to do. A lot of interesting data out this week, so we'll definitely keep an eye on that. It'll be an interesting one, and also the fact that we have Wednesday off now due to the president's funeral. That'll also make things a bit interesting.
Right. So I think that the equity in the bond markets will be closed. I think futures are still open. I don't know if it's on like a reduced schedule, how they usually do, or not.
Yeah, we'll get that information as well. I don't have that as well, but I'll speak to some brokers and get that because they do have that information out there. So we'll get that going. All right. Well, thanks, Tracy. A lot of great information taking us through the charts. I appreciate it, and we'll talk soon.
All right. Thanks.